Hello again. Welcome to all of you joining us from around the globe. I hope you're enjoying our first fully virtual collateral conference and made a selection of topics of interest to you. Great that you joined us for the upcoming session. We have the honor to now host a panel of central bank digital experts. The panel was organized in association with OMFIF, a central bank think tank. And our panelists will explore the evolution of the wholesale central bank digital currency, discuss the barriers and impediments to broader adoption and take-up, and consider its implications and importance for capital market and wholesale interbank payment innovations. The panel will be moderated by Chris Ostrowski from OMFIF, and he'll be accompanied by Habib Attia from the Arab Monetary Fund, Ousmane Manding from Accenture, Sopnendu Mahanti from the Monetary Authority of Singapore, and Romayos Ram from Finality International. I give the word to the panel.
Greetings to you all. The title of today's panel is When Central Bank Digital Currency is the Solution, the Future of Capital Markets and Wholesale Payments. I'm Chris Ostrowski, the Commercial Director at OMFIF. OMFIF is a central bank think tank based in London, and in May of this year we launched the Digital Monetary Institute, the DMI. We launched this institute because central banks wish to engage with private sector participants around areas related to digital currency in a neutral platform, and that is what OMFIF provides. Today we have Ram from Finality, Sopnendu Mahanti from the Monetary Authority of Singapore, Ousmane Manding from Accenture, and Habib Attia from the Arab Monetary Fund. We've heard and read so much about central bank digital currencies, but I would like to start by asking you, Ram, why the potential launch of a CBDC is relevant to wholesale markets.
Thanks, Chris. And before I get started, I just want to say thank you to both OMFIF and Euroclear for organizing this conference, and hello to all of my colleagues on this panel. It's a pleasure to be on with such an esteemed company. So I guess the question is, why is central bank digital currency relevant, particularly from a wholesale perspective? I guess there's several things to answer. There's several things that we could answer. I could answer in that question. The first is really around: is central bank digital currency really required for the wholesale field specifically, or are there sufficient innovations already happening with RTGS, etc., that mean that central bank digital currency is not necessarily required? For me, the question is really one about, from a central bank perspective, how much access are you going to give to different participants? So if you consider just the RTGS systems, there's a limited number of participants that can have access to that system. And so you can actually achieve many of the things that you would normally want to achieve from a wholesale perspective with that RTGS system. The big thing that's not possible right now is having a much wider access, which actually goes towards lowering risk across the system. So obviously, if you have an intermediary, so intermediary banks, etc., on the RTGS system, you're increasing risk as you obviously have to take the credit risk of each of those intermediaries as you go along. So for me, the big question that needs to be answered is, if you widened access, would you actually need to have a wholesale CBDC?
Thank you very much, Ram. And asking you a similar question at the Arab Monetary Fund, Habib, you have developed projects that have strived to integrate the inter-party workings of your member organizations, your member countries. Do you see a CBDC as part of the solution to what you're doing? Is this essential to achieving what your objectives are?
First of all, thank you, Chris, for the question. Let me just say first that I'm happy to join this panel. I'm really excited on behalf of the Arab Monetary Fund for the invitation or the opportunity you give us to express our views regarding this very important and evolving topics of both currencies and payment. Now, let me talk about your question. So basically, and within the central bank community, there is not a lot of change when it comes to the future of finance, as they are upgrading a lot their systems, particularly payments, moving quickly to real-time payment infrastructure, for instance. And the next steps is about how it's going to change the face of money through definitely central bank digital currency, and also how big data, machine learning, and artificial intelligence can help improving the whole financial system or financial sector intervention. So within this in mind, I would say that, I mean, at the present, and the top priority for the global community today is not about CBDC, which will certainly come in due course in different ways. And many central banks now are working on it. But the top urgent priority, as you mentioned, I think, is to improve cross-border payments, in particular for low-income and developing economies, because it's a matter of financial inclusion, it's a matter of cross-border payments, it's a matter of compliance, and that matters, of course, for growth and for a global economy. So coming back to Buna, may some of you have heard about Buna platform, but before under a different name, which is the Arab Regional Payment System. So Buna, let me start by saying that Buna stands for infrastructure in Arabic. And indeed, Buna is a financial market infrastructure. More precisely, Buna is a payment system, and it comes as no surprise that it carries a lot of characteristics of a payment system. In fact, within the context of the development of cross-border payments, but also in the context of the development of digital currencies, the Council of Arab Central Banks and Monetary Authority governors has initiated this important project with a strong belief that cross-border payment solutions are essential to empower Arab economies, strengthen regional integration, and promote Arab currencies for cross-border payments in the region. As you may know, this platform has been recently launched by the Arab Monetary Fund as the owner of the system. And the objective is basically to answer the challenges of cross-border payments in the region, but also beyond the region, because Buna by its nature is not limited only to 22 Arab countries, but Buna is fully aligned with the G20 agenda that emphasize the importance of developing and promoting cross-border payment solutions. Of course, we can say that Buna today is a concrete contribution to the G20 agenda in delivering a multi-currency and cross-border payment system that is centralized, low risk, secure, which promote definitely best practices to increase the level of compliance. Now, having outlined that, and Buna is fulfilling the main objectives of digital currencies, basically. However, what we see the added value for such currency in such system, either could be public or private, will be in its form as a settlement medium to expand the existing payment functionalities through the tokenization, for instance, features, and facilitate payments through the use of digital medium as a settlement currency. Definitely interoperability within the different players, participant within Buna platform, including potentially in the future wallets. It should be built on a digital, currency, which is interoperable. And I think this is the key use case and the key success factor for such digital currency to support or to be an added value to such regional payment system.
Thank you, Habib. That certainly sounds like a far-reaching project. So, turning to you, Usman, I mean, Accenture are doing a lot of work here. You've heard there about Project Buna and the objectives that the Arab Monetary Fund are seeking to achieve. Why is a CBDC then necessary? There is amazing technology already being put to good use. The work on integrating different financial operating systems is already underway. What makes a CBDC essential as we go about this work in the 2020s?
Thank you, Chris, and thank you very much for inviting me to this panel. Look, I think CBDC is part of a broader debate about greater diversification in finance, really by actors, by mediums, by currency, by geography. So it's really equipping money with new functionality and extending, in particular, what central bank money can do. So I don't think it is about can it do, or is it about doing the same thing we can already do with existing technology. The emphasis is clearly on extending functionality and utility of central bank money. In that context, I think the emphasis is on diversification. We want more optionality. We want more diversity in the way we conduct payments. It can serve as a catalyst to give rise to new financial ecosystems, in particular for token-based financial market infrastructures. And central bank money should serve on these more differentiated infrastructures for the same reason it serves in a domestic setting, namely to provide the safest money to conduct financial transactions. So I think it is not very much about, oh, do we really need it? Because given the level of sophistication we have already achieved, but it is more about, don't we want to have a more diverse, a more resilient infrastructure? And I think this is where CBDC fits in.
So, Usman, just to go back to you, the resilience and diversity is waiting to happen. People are happy to tokenize assets and securities, and this is the thing that will allow them to do that. Is that your perspective from where you're sitting?
Well, to be honest, I think the tokenization of, or the emergence of token-based financial market infrastructures through tokenized assets, etc., I think may follow the adoption of tokenized settlement mediums. We don't have high-quality settlement mediums for these tokenized assets yet. This is why CBDC is important in order to give confidence that these assets can be settled with the same quality as conventional assets. So I very much see it as being a conduit towards and an essential element towards building these financial market infrastructures.
Thank you. Sopnendu, thank you for your patience. The Monetary Authority of Singapore has led the way with much of the work in this area, and in China and Singapore and across Asia, we have seen great strides being made. What would you say would be the best way of achieving this settlement medium that is of sufficient quality to allow these changes that Usman and Habib and Ron were talking about?
When we talk of a wholesale currency, we must understand the primary design of this currency is efficiency as a motive, and it works between the banks, between the central banks and the banks and interbank in some cases. So anything we do, we stay within the system. So having a wholesale currency allows us a lot of opportunity to build a better efficient structure when it comes to three things. Whether it is settling between two parties, we can actually make an atomic swap, instant asset, and the payment can happen at the same time. You can actually bring greater transparency to the process. And the third, it does help when it comes to cross-border transfers. So these are the three ingredients which drives a value for having a wholesale currency as a mechanism for especially on the capital market side, or when it comes to the interbank settlement. So that's the fundamental premise on which we started moving in this whole space. Now, we must not forget that whenever we talk about a digital currency, there's an underlying architecture called blockchain, a distributed ledger, because this goes side by side. You cannot, there are many debates to segregate the ledger from the currency. I personally don't believe that it is the right way to go, because both comes as a package, and we must find a way to use it smartly, especially when you're designing a smart contract which involves an embedded cash, which involves an embedded rules for the particular contracts, and we're trying to execute both together. It has to run on a distributed ledger. So you got to take this whole piece together and create a framework for wholesale currency to succeed. Now we can always argue that there are existing systems which can get better, but my argument back that you have not done it better. It's still the same thing after many years. So let's give a chance to somebody who wants to solve the problem with the new architecture. Of course, there are always debate on which to go for. Now, and more broadly speaking, I think briefly, Habib picked it up from his intervention that when it comes to cross-border, there are certain challenges today in the whole process, especially the settlement of existing correspondent bank structure. I think having two central bank or multiple central bank opening up the ledger in a distributed way allows settlement to happen instantly when a cross-border exchange of goods and services happens along with a payment will definitely change the structure and the mechanism of the future construct of anything we settle overseas.
So if the DLT solutions are there, and we think that they are, what is stopping them being used? We can see the room for improvement. We can see that the technology is there. Why isn't it happening?
Yeah, very good question, because it took us 3 years to figure it out how to use it. Because as a central bank, we believed always in experiments. We did a lot of partnership with other central banks to understand multiple ledger operating framework. Now, look, 3 years we spent in 5 phase 1 project called Project Ubin. We first understood how to digitize our own currency, very fundamental. Then we started understanding how to move money on the rails. Third, we started understanding how to build different settlement model. Then we started thinking about how to use and merge it to different smart contract and asset. So we took a journey of understanding step by step. Today, we released like a couple of months back, we had the final phase of the project where we said that no more experiment, time for production. I agree with you, because the experiments are all done, tested. Everybody can go and check our report. There's a source code available. We can debate on that. Now the question is, will the production happen next 6 months or within next 2 years? Answer is, it takes time to build a system which is so fundamental in nature, especially if it's a capital market infrastructure, is a big market infrastructure. My sense is it will come in stages. The first stage will be the use of wholesale currency when it comes to payments. I think once that gets into production, then the other parts will also kick in. For example, as we speak, close to 60 to 70 billion dollar of money has moved on a DLT network for trade finance. So people are getting used to the idea of running payments on a DLT
in China,
network.
in Singapore,
in China,
yes,
in
I
Asia.
have done that, yeah.
And we also get used to the idea that, as an example, in Philippines, Treasury issued that Treasury on a DLT network. In Singapore, Olam Temasek came together, issue a bond on the DLT network. So you see production grade action happening as we speak in Asia. So once you see 3, 4, 5 use cases getting into production, there'll be a point of time, there'll be a merger of all this knowledge. At that point, the market infrastructure will come in, which are essentially public rails of DLT and wholesale currency.
Thank you. That's certainly inspiring talk from the Monetary Authority of Singapore. Ron, just to put this question to you, the last three speakers have all spoken about how wide and varied the market participants are. I mean, just hearing Sotnendu there, you've gone all the way from the issuer through to the person who's handling the money, through to the person who's the contract in the life cycle of one of these instruments is so extensive that surely one of the hardest things is not just to get everyone to buy into it, but just to get everyone signed up to it. This will inevitably involve a close form of working, a close partnership between the public and private sectors. Can you talk to us a little bit about Finality's work and how you have engaged with the central banking community on the work that you've done? Because it strikes me that without this form of collaboration, the things that we've heard will perhaps not be achieved.
I agree with many of the things actually the colleagues have said beforehand. I think to answer the previous question a little bit from my perspective and lead into the question that you actually asked me, building the technology is kind of only one facet of the problem that needs to be solved. And actually, as was stated earlier, as people have gone along over the last several years, it's become easier and more people have understood it. So really getting to a production type system that's safe and resilient and all that is not a massive problem. The big problem is, how do you mesh this technological capability with the need to keep the entire system safe and sound from a kind of oversight perspective? So how do you bring it into line with all of the regulation and legal basis, et cetera, that already exists out there? And we at Finality have been on a 4-year journey now, still going, to basically find a way to work with the various authorities. We're working with the US, Europe, UK, Canada, and Japan, to find a way to ensure that the systems that we produce will meet all of those regulatory requirements. We think that this is the best way to approach it, because the authorities have expertise in a number of areas, but they don't necessarily yet have expertise around how would the system between, let's say, Europe and the US interact with each other. So you kind of mentioned interoperability, I think, a little bit earlier in the conversation. Like, how would that actually work between the central banks? Who would help them coordinate and so on? And so I think the private sector has a lot to offer to help coordinate some of these activities, and indeed help with the initial expertise that's required to roll such systems out to all the various participants that needed to host it, nodes, and so on. So I think there is quite a large scope for the private sector to work hand in hand with the authorities. And as I said, we've been working. I don't know whether you could describe it as particularly closely, but we've certainly been working with the authorities over the last 4 years.
And what do we expect to see from that then, Rom? I mean, are we talking about a CBDC which has a more efficient settlement, digital settlement solution? And is that something that we might expect to see in the next 6 months, 2 years? We've heard various predictions. What would we expect to see in that regard?
Yeah, so the first thing is, the thing that we're doing won't be a CBDC, because the only people that can produce CBDC are central banks themselves. Well, I guess there is no dictionary definition of CBDC, but generally speaking, anything that's from the central bank has to be a liability of the central bank. So what we would produce would be much more akin to an existing wholesale settlement system. I mean, we'd basically be a wholesale settlement system that offers real-time payments, PVP and DVP, all from a single pool of liquidity, and that's kind of the unique aspect of what we're doing. In terms of timeline, the conversation has now gone far enough where I would expect that we would see, as we've seen over the last few months, more kind of announcements, I guess, as a way to say it, but more statements from the policymakers around how they would handle arrangements such as ours. So we've seen papers now from, I guess, from the ECB and from some other authorities around cryptocurrencies. I'd expect to see more of those types of things from other authorities. I think the authorities will also start to separate the crypto space from the area where the risks that are posed by the systems that are getting produced are identical to the risks that are currently overseen, and so they'll find a way to either produce policies or produce some other kind of direction for these arrangements to go live. I think that will happen imminently, and then all of the arrangements like mine will be able to move forward beyond the just actually producing the technology and running the operations. Will actually be able to go live.
Yes, I think from the sort of publicity standpoint, separating the official sector in digital currencies from the non-official sector in regards to digital currencies is very important. And that was one of the reasons why OMFIF launched the Digital Monetary Institute, as cryptocurrencies' influence have grown. The official sector, by official sector I really mean the central banking community's view of this, is very important. I'd like to pick up on what you said about the liquidity implications. Finality with a sort of single pool of liquidity. How do you envisage liquidity management changing when the types of solutions that you have in mind come on stream, Ron?
So the biggest disadvantage of the system as it is right now, and it's based on the fact that it's intermediated, is that any participant would have to have different pools of liquidity at the different players. So you may have several correspondents that are managing your regular payments in foreign currency, so you've already split your liquidity pool. Then if you're performing DVP or anything like that, you would then split amongst the different venues. And that overall is inefficient and costly for you. If a system like ours grows the network sufficiently, you should be able to keep all of your liquidity concentrated in a single pool, and then you'll be able to enact P or DVP or PVP indeed with any of the other systems without the need to segregate into different accounts. And so the way I think that will start to impact the market going forward is you'll see a speeding up of the recycling of liquidity. So people won't need to have as much liquidity tied up kind of idly in different accounts. They'll be able to speed up the use at which they can recycle that liquidity through all the different settlements that they're doing. And that should be a massive benefit actually for the system as a whole and for the economy as a whole. You're basically able to settle things much faster with much lower use of financial resources.
Certainly the speed of settlement and the changes that will bring in will be quite far-reaching. Habib, you represent these 22 countries that you mentioned. Where do you see the biggest benefit coming from? Is it, as Rom just mentioned, in the speed and I suppose the lack of liquidity requirements that would allow easier flow of financial instruments, easier flow of cash? When would someone within the Arab Monetary Fund see the benefits themselves from Project Buna or from the other things that you're doing?
So I think this is a very large and big question, and it's very interesting to talk about it as well, since in particular at the IMF we are let's say 22 Arab country organization dealing with central banks in the region, and the topic of CBDC, of course, it's an important topic. Despite that, we are now progressing in the cross-border payments, but how to see the benefits for the region from our side? Let me maybe first go back to the construct of the central bank digital currency, and we know that we are talking about two possible ways of a central bank to issue the digital currency, wholesale, or to be distributed through existing banks in the banking system, or retail going straight to consumers. And let's go back also to some objectives that we want to achieve with digital currencies in general and central bank digital currency in particular. They are, as maybe all people knows them, I can summarize them in three. The first is streamlining the cross-border payments. The second is expanding access, to people who are unbanked or underserved by traditional financial services to have access to financial services. And the third one is definitely increasing compliance. So I think there's three major use cases or issues or challenges that we are looking to address. We need to think that how a central bank or how digital currencies can definitely address them. Now, if you are actually just targeting wholesale distribution to banks, then you know what problems you are solving. You could probably have some efficiency gains, but banks currently have windows with central bank's money, which are quite functional. Or if you go to retail, then the big question for central bank here is, are you prepared to serve retail consumers and small businesses? And what happens with banks that actually need to extend loans to new economic niche? I think this is really important to look at it when we talk about how central banks can engage in this process. So there is an interesting hybrid model that have been evoked on CBDC around enabling not only banks but also wallets to have access to those facilities. And those are really interesting development. I think are worth continuing to track. But I have also to say that the whole attention of the world now on digital currency, whether it's stablecoin or CBDC or other forms, is really encouraging, because as far as we are concerned in the Arab region, the whole idea for us is really not around a certain way of doing things, but more around let's come together and let's try to figure out how we solve problems, such as financial inclusion, which is very important in the region, and cross-border payments. So from cross-border payments perspective, I think with Buna, it's a huge progress in the region, but we need to go beyond this cross-border payment. We need to see how the financial inclusion, I mean, the underserved, the unbankable people could be basically joined the financial system. And I think here we can see the value of such, let's say, hybrid model in order to give access to these facilities beyond the banking system. Let's talk about maybe the value that needs to be delivered to consumer. Is that if, for instance, if today consumers are using a wallet or any other wallet to have an interoperability layer at the core of the network they use, so you know that's how internet works today. So it's important when we develop such, let's say, wallets or networks or platform of payments, to make sure the interoperability is here. And when we talk about digital currency, I think is one of them, and it's important to consider that. But this situation is currently, I mean, is not the same. When we talk about the interoperability, for instance, in internet, I think it's quite well functioning. But when we talk about the payment, I think it's really there is rooms for improvement. I think, for instance, in Europe, just maybe the last one, which is I think it's really important. It's about basically the answer of the central bank digital currency when it goes to consumer, how this could be and should be driven by the different regulators. Thank you.
Thank you. We often speak at the ONFIF DMI with the central banks who talk about the, I suppose, different objectives and the different driving forces behind a retail central bank and a wholesale central bank, and you touched upon them there. So, I mean, Usman, just from your point of view, where do you see the biggest changes coming from? Is it some of the retail changes, financial inclusion that Habib mentioned, or is it more about the tokenization of securities and so on, which will obviously make the sorts of liquidity changes that Ron was talking about? Which do you see as the biggest opportunity to make the most change at the earliest date?
I have to say, I think the big impact of CBDC I see in international transactions, and I think it's sort of important to see the recent announcement we had, particularly by the ECB, which basically stated that the future digital euro will have to be held by non-residents as well. And this is really a sort of a striking admission that if we wanted to improve materially international payments relations, then central bank money in a digital form should also be held by non-residents. And this is really a big change that may lead to completely recalibrating how international payments relations are being conducted. Now, on the retail side, there is a good case for CBDC, certainly, but I think it accrues mostly to the central bank by creating a more diversified payments infrastructure, affording greater autonomy to the central bank. These, I think, are the main benefits. For the consumer is probably going to be relatively indifferent between using CBDC or paying with a debit card or paying with PayPal or any other form of payment. In a wholesale context, I think the benefit will indeed come if we have a truly tokenized sort of financial ecosystem where we have tokenized securities and we can do and use the sort of native capabilities of tokens in order to bring much greater efficiency to exchanges. But again, I think the big benefit will be in international payments. If we can extend reach of central bank money to non-residents, and if we can allow the same ease with which we can settle securities onshore in a cross-border or even in an offshore context, I think we will dramatically change the way international payments are being conducted. We lower transaction costs, we allow smaller companies to benefit, and in particular small and medium-sized enterprises in an international context. And this is really where I see the benefits. It's about reach. And what is the best approach in order to reach for central bank money while preserving needed, prudential safeguards? This is, I think, what we are trying to solve now.
Thank you, Usman. And so, Sopnendu, where are the other market participants ready? I mean, what you just heard Usman describing there, smaller companies, uh, easier liquidity management, the commercial banks will obviously be involved. Are the other market participants ready to take this step to make these changes, particularly on the wholesale side, where you say that the technology is ready and you can see everything in place? What do you think needs to happen to not just talk about the central banks, because we can kind of cover them, but the other market participants who are going to be essential to this? What is necessary? Is it interoperability? Is it fear of the other country's regulatory system? And how can some of those things be overcome?
So let me declutter the question into multiple parts. The first part is your question around private participant, non-central bank participant in the network. Absolutely, I think it's critical for us to understand central banks are not going to operate the systems. The systems will be operated by private players. Central bank is going to issue a digital currency. I think that's it. Plus, there will some governance. They will manage the governance process. But the bulk of the operation is with the private parties. Somebody has to run the FX settlement. Somebody to run a multi-currency platform. Somebody else has to run a settlement processes. So there's a whole set of market participants who have to come to make it work. So that's one part of the structure. The second part of structure is that who is going to consume this wholesale currency? Yes, of course, it will be consumed by private players, especially large parties who are moving large sum of money and who are moving large contracts, who have to exchange large contract, a lot of counterparty risk, because these are the perfect use case to use wholesale currency when there's a huge counterparty of risk both sides. We need to ensure that if there's certain asset moving from both parties, how to ensure that the payment and the transfer and the asset transfer happens at the same time. I have told in the Digital Dollar Live conference, look, to me the CBDC's beauty, apart from all this thing we talk, is one significant shift which we have not seen till now. What is the shift? Today the world has two processes. There's one process for moving money, there's one process for moving assets, whether it is goods and services, or you're exchanging documents, or you're exchanging some contracts. They're two distinct processes, and everything, and both the processes run through their own complex settlement and other operational process to make it work. Imagine in the world where we bring these two processes together to single process, and that single process is not only moving money, it's also moving with the goods as it moving through the buyers and supply chain. So having to able to merge these two processes is perhaps the ultimate beauty of wholesale currency. To do that, you need definitely the private players to come in. It cannot happen by a central bank telling that the next cross-border payment will be wholesale currency.
And are you seeing that? I mean, you've got Accenture and Finality on the panel today. Are you seeing that type of engagement from the private sector participants?
Yeah, okay. But I think the private sectors are definitely moved ahead of us when it comes to registering the asset, tokenizing the asset. So they have already moved ahead. They're not waiting for us. All they're telling us that, look, we have started digitizing our asset. We are moving our contracts on DLT network. Give us your wholesale currency. That's what private parties are telling. I have moved my goods. I have tokenized my asset. Where is that wholesale currency? So now the ball is in our court to see how quickly we can support that need.
Okay, and so I mean, Rom, as we sort of come to the closing minutes of this, I mean, Sopnendu there spoke about how the current payments system isn't linked to the underlying transaction, and were it linked to the transaction, you would see that shift. There is still the word that we have spoken about and we've spoken about often is interoperability. As someone who's trying to work with these central banks in there, how is the interoperability issue seen from by the central banks who you're working with? Is this the main problem to solve? Is it something which they are in the process of overcoming? Do you see this being solved as you continue your work over the next few years to decades?
Yes, I think the problem is getting solved. I think there's two aspects to it. So one is the technical problem of how do you solve for interoperability, and the key thing that we're solving for is really delivery versus payment or payment versus payment? Can you do those two things where it's if and only if one happens, then the other happens? I know that the Ubin project and Supapendu have actually done lots of work on that, and we've done some work on that. So definitely a solvable technical problem. The piece that you're really asking about is it solvable from how the different regimes interact with each other? And my conversations and understanding is I think we're on our way to solving that. It's not a straightforward problem because, of course, there's always a question of, well, if something goes wrong, who's minding the shop? And so you need to have some sort of entity that's overseeing. I'll take cross-border for the moment. The cross-border nature of what's going on. What happens if there's events in one network that spill over to another network, et cetera, but those problems, there is a mechanism whereby those problems can be overseen by the authorities. They, there's precedent for the authorities to band together and collectively oversee different financial market infrastructure. So I think the mechanisms are there. The exact nature of how we would solve this problem is still getting ironed out, but it's definitely a solvable problem. So solvable both from a technology perspective and solvable from a governance perspective.
The governance perspective. Something, did you want to come back on that?
Yeah. So I forgot to answer your interoperability question. Let me put, there are two parts to interoperability. Now the question you're asking, let's say two central banks running on two different technology, will it talk to each other? The answer is yes. Today, all the major tech providers have agreed, irrespective of which platform they run, the processes and the interoperability is already part of the design. That's already understood. The second part of interoperability is the ledger itself. I think that's something each central bank has to sit together and see whether they can put the two ledger out there, and both the ledgers can update each other if there is a case to do that. But the third aspect to interoperability is: do you need interoperability in a world of digital currency? I'm sort of questioning that. That is a term which is applicable in a non-digital currency world, because there it requires the messages being accepted both sides, the different standards. But when it comes to digital currency, I'm still struggling. Is there a better definition than interoperability?
Very interesting point, because if you don't need interoperability, then that goes away. But then this would be something that would take some convincing, I think, for how things are, especially when it comes to governance, which was what Ron was saying. As we get to the final minutes, I'm going to ask Usman and Habib what you think the biggest barriers are for CBDCs and the changes to the wholesale capital market system over the next year. Where we sit here at the Collateral Conference in 2021, what will we have seen change between now and then, both in wholesale capital markets for a start and in the CBDC landscape secondly?
On the interoperability, I mean, I think it's absolutely right that it has various different definitions. I think it certainly is a stumbling block, because there is the concern that you adopt a technology which then will be an island and will not be able to communicate with others, and so that needs to be solved in one way or another, either by common standards or by some understanding, common protocols like we have for the internet, in order to allow the tokens to communicate across different technologies. I think that's absolutely key, and I think it's one of the big obstacles now. We need to solve it. So next year, I think what we will see is probably a wholesale CBDC to be introduced by a major central bank for wholesale transactions. I can see that. The time is up, but that is what will be my predictions in the short term.
The same question for you, Habib, with the project work you've got. In 2021, what changes do you think we'll see in the wholesale market that you've spoken less about, but also when it comes to digital currencies?
The technology is moving fast. The private sector is an important player in this context. But I see personally two main challenges. The first challenge, of course, is from a regulatory point of view. I think it's important that well-regulated digital currency with enough visibility, enough public policy as part of the governing this infrastructure can really be an opportunity to make a big shift from in payment industry. I think this is important. Second challenge I think we discussed about it. Is about the interoperability. Honestly, and what the way I see the world is basically it would really be unfortunate if you have a large number of fragmented networks that don't interoperate or communicate with one another. So the value that needs to be delivered to consumer is that if they use a wallet or any other wallet to have interoperability layer at the core of the network they use. That's how internet works. We cannot imagine today if you use a mailing network A and you couldn't send an email to someone else with a mailing network B. But this is currently the situation when we talk about payment, unfortunately, across the world. When you use a wallet up to date, you cannot send a payment outside the wallet app. I think, for instance, when you look at SEPA in Europe, even it's not a digital currency, but the interoperability system, I think it's a good example for us to see how you can move money around European Union very easily and cheaply and very fastly. But it's not the case around the world. And when we talk about the digital currency, how I see it is really connecting the world north to south, from east to west. So interoperability, I think it's a really, really important challenge going forward.
Thank you very much. Gentlemen, thank you. For people watching this, if you have any further questions, I can certainly put them by email to the panelists. If you email me at chris.ostrowski@omfif.org, or you can find me on LinkedIn and we can keep the conversation going. But to Rom, Sopnendu, Usman and Habib, thank you all very much. And thank you to Euroclear, and please enjoy the rest of the conference. Thank you.